Shares of the country's largest stock exchange are set to change hands in the over-the-counter market. Three financial institutions are looking to sell at least part of their stake in the National Stock Exchange, or NSE. Sajeet Manghat Johnson now with the details. Now, Sajeet, this is a very sought-out IPO. A lot of people are looking forward to it. Valuations have actually inched up, if I'm not wrong. Why is it that these investors are looking to sell the stake?
You know, December 2016 is when they first filed the DRHP for an IPO. That was under tremendous pressure from these minority shareholders and financial institutions who wanted to exit. Post that, you had a SEBI probe, and then following that SEBI probe, they had a 6 months period from where they couldn't come out with anything on the capital markets or even do anything on the IPO, and that got over somewhere in September and October. Post that, SEBI, NSE had written to Securities and Exchange Board of India, the market regulator, seeking permission to launch products as well as to go ahead with its proposed IPO. Now, the regulator hasn't come back to them. One of the reasons why the regulator hasn't come back to them is primarily because NSE has gone and challenged the entire SEBI order at SAT. And that hearing is still going on because SEBI had sought 625 crores and interest at the rate of 12%, which comes to roughly around little more than 1,000 crores as disgorgement for the co-location and dark fiber, especially the co-location part of the case, which was there. Now, what is happening is that in the last 3-4 years, when initially NSE filed its IPO prospectus, nearly 22% stake was supposed to be offloaded to public via offer for shares by public institutions and financial portfolio investors. But that hasn't happened, and in 3 years' time, there is still no certainty that when the IPO will happen in 2020, because it all depends upon whether SEBI is able to complete the probe or the decision on the co-location comes to an end. NSE is looking to launch a slew of products, but is not getting any approvals for them, and that is one of the concerns which many of the investors have. And public sector institutions like you look at SBI, maybe Union Bank, or maybe United India Insurance. These are the three which are trying to offload nearly 2% of the equity in the market. They want capital by the end of this financial year, and they're trying to sell off non-core stakes and assets, and that's one part of it. And with no IPO in the immediate future or near term, they are going to the OTC market. So SBI has come out with a bid process. Union Bank is also doing the same thing, and United India is also doing the same thing. Now together they're selling roughly around 1 crore shares. Now the thing is that the shares of NSE are marquee, and there is a lot of demand in the market, in the OTC market, especially for retail and HNIs. But the demand, is not in that much to take 1 crore shares into the market. So there is some softening of prices also which has happened. But in the last 1.5 months, we've seen, especially in January, we've seen that marquee investors like Radhakrishnan Damani has acquired some stake. We don't know how much it has acquired. A mail to Mr. Damani's office hasn't been responded to. So it's said to be at 825, the transaction that happened. And after that, there has been an increase in awareness, interest for these shares in the market, especially in the OTC market for retail and HNIs. What is happening is that institutions are selling at a minimum lot size of 10 lakh shares each, and there is no single investor who can buy 10 lakh shares because it requires commitment of 100 crores minimum for anyone, assuming that the price is between around 1,000-1,050. That's the range which we have been seeing. So a lot of wealth managers are currently active in the market. They're creating a book where they're asking their investors to pitch in how much they want from NSE shares and the price at which they want. And once the book is built, they are the one who are going to bid to the three institutions and a lot of 10 lakh each. and so the institution will give it to these wealth managers or AIFs, and then they will get distributed to the respective investors in the ratio they want.
Sure. Okay.
Their portfolio to be. That process is still going on. There isn't because there is sudden influx. SBI started off at 50 lakh shares. Now suddenly you have Union Bank coming in, and then United India Insurance coming in. Suddenly there is 1 crore shares in the market. So there is a softening of prices that has happened from 1050 odd. It has now ranges between 935 to 1015. That's the kind of book it is getting built on. But safe to say that that puts a valuation of NSE at around 46,000 to 50,000 crores. That's nearly 20 times the valuation market cap of Bombay Stock Exchange, which is listed. So it gives you a marquee thing. We have the NSE management on record saying that they expect the IPO to happen by September 2020, but there's still no clarity on the SEBI case or SEBI's approval, which is there.
Okay, but interesting that while there are a set of marquee investors out there, because of the spate of supply that we are likely to see, there's been a softening in the prices in the OTC market. Sajeet, thanks so much for putting that into perspective. Very interesting story.